Hey, big bulls, welcome back to another episode of Bullseye. And we got three interesting stories for you today, kicking off the earnings season. Saloni, what are we talking about?
So today we talk about TCS and HCL Tech's Q3, what they indicate for the IT industry, why Biocon has been popping up in the news lately, and the recent Stallion India Fluorochemicals IPO.
Okay, and let's begin with the IT industry, right? Because they are the ones who usually kick off the new earnings season announcements. And in this case, it is Q3 FY25, which is October to December quarter. So run us through what is happening on the IT front, Saloni.
But before that, let me just, give a backstory, right? The industry hasn't been quite living up to the expectations because the Indian IT services sector, it thrives on disruptions, right? Instances like the Y2K bug, the 2008 crisis, and COVID, they all sped up digitization.
Right.
So now the 250 billion industry with around 5 million workers, now this faces a major shift because they need to reinvent themselves, the companies as well as the coders, right? And the industry also has been slowing from the past 2 years, due to global recession fears, the business action not being there from the US and UK markets, which are key markets for the Indian IT industry, right?
Of course, yeah.
And also fewer deals in the market as well as, earnings downgrades by the brokerages.
But things were seemingly getting a little better, right? There have been talks about a recovery happening. Brokerages have been getting a little bit more positive also, I think. But more importantly, tell me about the guidance that's coming out from these companies. What are they expecting from the future?
Right. So, as you said, like B Street expected this quarter to have better deals, better margins, and also better guidance, So the earnings guidance is nothing but when management shares future expectations on sales or, revenue for the company. And that is based on the industry and economic trends that they try to gather and understand where their future projections are, right? And this helps the investors gauge the company's future performance, also helps to understand where the stock might be headed. And this is why guidance matters. So now when it comes to TCS and HCL's Q3 earnings for this quarter, they did meet expectations. TCS profit jumped around 12%, whereas HCL's rose about 6%. And TCS management commentary was also upbeat over the last 2 years. And in their CEO's words, he said that last year also we said 24 would be better and 25 will be better than 24. And we feel 2026 will be better than 25. So there's obviously that coming in.
There's optimism about the future. But Saloni, with HCL Tech, there's been a slight bump in the guidance and the stock has also reacted negatively despite the profitability uptick that they've announced.
Yeah, so because they did not, have that improvement in their guidance announcement, right? That is hinting at a weaker Q4, for this financial year. And that is kind of hurting the vibes, as we say. And even as brokerages noted that the new guidance is disappointing, though Morgan Stanley feels that the positive commentary from the management as well as better margins has definitely made up for it.
Okay.
So Biocon has popped in the news lately, and that's because a bunch of things has been happening with the company, right?
Yeah. To start off with, the latest news is actually the US FDA, which is kind of like the be-all and end-all of everything in the pharma industry. They've actually given the green light to the Malaysian unit for Biocon. And this clears a big hurdle because the Malaysian unit is actually a key growth driver for one of their biosimilar businesses, an insulin biosimilar called Aspart. Now, biosimilars is actually Biocon's biggest business, contributing to 59% of its revenues. And in case you're wondering, and our listeners are wondering what a biosimilar actually is, think of a biosimilar as a copycat of a biologic. Now, I do have to now explain what a biologic is, right? A biologic is actually one of those complex drugs that you see that helps to actually fight those diseases like cancer and a little bit more, ones that normal drugs cannot easily handle. And biologics does this by actually mimicking our immune cells. And they're made up of actually living systems like yeast and bacteria, and not just chemicals per se, which is what you see in regular drugs. And this is a complex business which has actually driven the entire growth story for Biocon for a while now, right? And this is actually gaining market share in US oncology. Like I said, for cancer, it's quite popular, and insulins as well, right? With diabetes being so prevalent. So this is where Biocon is now looking to expand even further. And the Malaysian approval actually gives it a huge boost to then export into other markets as well. But they've also got approval for Stelara. Now, Stelara is the biosimilar of Stelara, which is a biologic, right? Like I said, it's a copycat. So this approval is also a big positive because it's now set to launch in February of 2025.
And I was also reading some reports, especially by this brokerage HSBC, that said that Biocon is now ready for a turnaround, right? Because these regulatory hurdles are now making the way for them to launch these new businesses in the biosimilar segment.
Absolutely. So there's the biosimilars, which we spoke about, but there's also a sort of recovery that people are expecting in the generics business, which accounts only for 17% of Biocon's revenue, but it's still, in a sense, a key part of Biocon. Now, again, generics, if you think about it, think of generics as a copycat of your regular innovative drug. So a normal pharma company can spend billions of dollars in research and development over a period of time, and they will launch this drug that only they can sell for a certain period because they've got a patent on it. Now, a generic, what happens is they come in and they mimic that drug once the patent expires. There are other ways to do it as well, but this is the broad explanation of this. And even in this, now what is happening is the company's Bengaluru unit for Biocon, they've got the green light from the US FDA. So manufacturing can actually go on in full swing right now. And not to forget, after all this, there's also the process of cutting down debt. So Biocon had actually bought Viatris Inc.'s global biosimilars portfolio for over $3 billion in 2022. So there's growth and regulatory hurdles being cleared in the business, but there's also debt being now cut down.
So I think this is the kind of news flows and updates that's led to many brokerages like HSBC, Jefferies, and even BofA having this upbeat view on the company and upgrading the stock as well, right? And especially regarding its biosimilars business, as you mentioned.
Absolutely. So there's growth there and there's cutting down debt, and I think that's what the market is looking for, right? So moving on now from one sort of chemical-based company to another with chemicals in its name. Let's talk a little bit about the fresh new IPO of Stallion India Fluorochemicals next, Saloni.
Yeah. So fluorochemicals are organic chemicals that have fluorine in them, and they are used in things like plastics, lithium ion that is used for semiconductors, and even batteries and drugs across industries like automobiles, pharma, right? Part of this industry is Stallion India Fluorochemicals, which is a key player in selling refrigerants, industrial gases, and even related products. So this company was founded in 2002, and the firm focuses on blending, processing, and selling refrigerant gases along with pre-filled cans and small cylinders with 4 factories in Maharashtra, Rajasthan, and even Haryana.
Okay, so that's a lot happening with this, but this is a 199 crore IPO, and this is running from the 16th of January till the 20th of January, right? And the issue price is 85 to 90 rupees a share.
Yeah, so the company is raising around 199 crores, but from this, 160 crore is in fresh issue. So the money that they will get from that is something that they will use for working capital requirements for the semiconductor and gas facility in Maharashtra, and also for the refrigerant facility in Andhra Pradesh, and also for the general corporate needs, right? Now, Shahzad Rustamji is the promoter of the company who owns around 94.6% stake, and he's selling around 43 lakh shares worth rupees 39 crore. So that's the proceeds that he will get. The company made a net profit of about 16 crore on rupees 230 crore revenue from its operations in FY24, and the company makes most of its money from refrigerants, which makes up about 82% of the company's total revenue, right? And this is how the comparison with the listed industry peers looks like.
But Saloni, if you actually try and find companies in fluorochemicals, you'll find a lot of players. This is not the only one. Stallion is not the only one, right? And there are competitors that are bigger in size and that have been spending a lot more money on manufacturing, R&D, and everything else.
That's true. Though these 4 companies, they make up about 78% of the market share in the industry, right? And this is led by SRF, which has around 30%, followed by Gujarat Fluoro, Navin Fluorine, and even Stallion India, right? So these players are now sitting on this opportunity of the Indian fluorochemicals and specialty gases market, which is expected to grow at a solid CAGR of 16 and 18% from 2024 to 2029. Reaching nearly around $720 million as well.
Okay, so Stallion is not the leader, but it's competing for leadership, and that's something that probably investors will be eyeing as they eye this entire, fluorochemical space. All right, so that's it from us then this week, folks. Thanks so much for tuning in to another episode of Bullseye. We hope you've enjoyed it. Don't forget to like this video, subscribe to our channel, and hit that bell icon if you want to get notified when the next episode drops. We'll see you next Thursday.